Welcome to Money Talks. I'm Genevieve Westcott with the latest financial news from across New Zealand and around the globe. In this edition, Fonterra says no to its organic dairy farmers, the frustration, the fallout, and the fears for their future. Chinese cash is coming, not to buy up farmland, but to help bankroll an $8.5 million Maori-owned fiber optic network connecting Auckland and Whangarei. And Cavalier Carpets is popping the cork and celebrating good news across the ditch. How are their Kiwi cousins performing in this important industry? All this and much, much more coming up, starting with the most up-to-date market and commodity information with ASB rural economist James Shortall. And James, the market continues to crumble. It still hasn't settled.
Yeah, well, we thought it might have settled last week, but it's been all over the show over the past sort of 3 to 4 days. At the end of last week, European markets crashed completely. Europe was down 6 or 7% in a day, but actually over the past 24 hours, markets are way back up again, and US markets are up sort of 2.5% to 3%. So all over the show, hard to pick.
How's the New Zealand dollar doing? We've traded back. When are we going to start to climb again?
Today, as we speak, then we're sort of up around the 83.5 cent mark against the US dollar. So creeping back up, and we're probably picking that. Unfortunately, we're going to go a bit higher.
How are we doing against the pound?
Yeah, so against the pound, was a bit of a similar story to what we've seen against the US dollar. We actually went below 50p against the pound, so sheep farmers, land farmers will be pretty happy to hear that, but they won't be too happy to hear that we've been tracking a little bit higher again, back up over that 50p mark now, and probably in the same sort of story as against the US dollar. Good
news here at home. Some of the New Zealand companies are doing pretty well. Any other good news coming out lately?
Well, it has been interesting because when you look at what's happening in the global stock exchanges versus what's happening here at home with the New Zealand Stock Exchange, we've sort of traded in a similar fashion, but by nowhere near as much, and we've been a lot more stable. And in my eyes, it really comes down to the fact that our corporates and our companies here at home have actually been doing pretty well. Their earnings have been pretty solid. They've been exceeding market expectations. They're better than what they were last year, and so it does give a bit of comfort that the New Zealand economy is actually in relatively good nick at the moment.
Let's talk about the dairy sector now. What are the movements around the world? What's going on?
Well, we have actually seen in the past week the US Department of Agriculture, they released their latest milk production figures. So we do watch them quite closely, the US being a big producer of milk, and they have lifted again year on year, but the growth has actually slowed over the past couple of months. We've talked a lot about weather interruptions out of the US, and so that is having an effect on milk production. So while their milk production is growing, I still think the developing world, the demand is still looking strong. I'm not too concerned about it just now.
How's our old troubled red meat sector doing these days, James?
Yeah, well, the US situation is a bit of a problem, I think, for the beef market at the moment. We've got, for farmers that are looking at their prices, then we've got two negative influences at the moment. One being the Kiwi dollar remaining strong and probably going to go higher against the US dollar, and the second one being the US market, which I'm actually picking that we may see a bit of weakness there. We're seeing more cattle going into feedlots with the dry conditions, and that I think will have an impact on prices over the next few months.
And Cavalier's been in the news lately, talking about wool prices. What's happening there?
Yeah, interesting, because Cavalier, big player in the market. They're selling the product down the track, and they're actually picking that we could see a bit of easing in wool prices. And in my eyes, then we've probably talked a bit about wool and the increases it's been through. I've probably for some time had the view that we would probably see some easing. When you see what cotton prices are doing internationally, they've come back a lot. It has to have an effect on other fibres. I'm not picking that prices are going to tank, but we might just see a bit of easing.
Okay, thanks, James. Coming up after the break, liberation, Libya, and the price of oil. The rebels defeat Muammar Gaddafi, supposedly. What will it mean for us here at home at the pumps? A boutique Auckland yogurt maker signs a multi-million-dollar deal that will put its Kiwi products in more than 8,000 convenience stores in Japan. And Aussies could be biting into Kiwi apples any day now. The New Zealand apple industry is licking its lips as it gears up to export to the Australian market. Don't go away. Ponder this in our Farmers' Facts and Figures quiz. According to a survey by Swiss bank UBS, New Zealand's rising exchange rate has made which city in this country the world's 24th most expensive city in terms of how much the average wage will buy? The answer when we return. Stay tuned. Welcome back to Money Talks. Just before the break, we asked you, according to a survey by Swiss bank UBS, New Zealand's rising exchange rate has made which city in this country the world's 24th most expensive in terms of how much the average wage will buy? Auckland. Interestingly, Auckland's rocketed up from the 43rd most expensive city just 2 years ago, behind Brussels and Rome. Joining us now is Senior Financial Advisor for Spicers, Jeff Matthews. And Jeff, we've seen some excellent company results in New Zealand lately. Tell me more.
Well, I mean, a company like Hellebids, which is an investment firm, really went through the doldrums a couple of years ago. They had some bad investments. They were carrying a lot of debt. And in the last 4 years, they've really cleaned up their balance sheet. They've repaid a lot of debt. Most of their trading divisions are all trading profitably. So they're actually in expansion mode. So they're in a good place to move. And Auckland Airport continues to, I think the profits were up 15%. Strong retail numbers out at the airport. Big increase in Asian tourism, so looking to do a major revamp out at the domestic terminal in the next year or two. So Warren Buffett always talks about owning a toll bridge or a toll road, and that's exactly what the airport is. It's really the only way out of the country, and so owning the toll road or the toll bridge is a fantastic business.
And Port of Tauranga as well. They did sensationally well, beating out Auckland. James.
Yeah, well, they've been going through a few different phases just recently, and exports have been going pretty well. Some of the markets have been going pretty well, so not really surprising there. But it is good to see, as Jeff's pointed out, that a lot of the New Zealand companies are doing pretty well, and we are quite well positioned comparative, with a lot of the other countries around the world.
Overall, what's it mean for the economy? What's the trickle-down effect?
Well, I mean, if people are spending, then the companies are doing well, and so we are starting to see a little of that coming through. And I think it's a good signal that the economy is in relatively good shape, and we actually started to see some of the dividends actually lift. So these companies are paying more dividends out to people, which is going to be a bit more money in their pockets, which is nice too.
On a scale of 1 to 10, Jeff, I was going to ask, how do you think? How would you rank New Zealand at the current time?
Oh, probably 6.5 out of 10. I mean, touching on James' point, it's great that companies are getting themselves in good financial position. The negative side of that is not enough Kiwis own shares, either through KiwiSaver or superannuation funds, in those companies. So, we don't get the total benefit that you do perhaps in Australia with compulsory super.
Yeah. Okay. Speaking.
I mean, if you look at Hellebids, for example, 4 years ago when the market weren't flavour of the month, they were trading at 50 cents a share. Now they're $2.50. I mean, and you say the dividends are up, but that only accrues to a limited number of people who have the cojones to actually go and buy those shares.
Yeah, New Zealanders aren't great playing the share market, are they?
Nope.
Yeah.
Well, I wouldn't. Play is not a word that I like to use.
No, I know. Of course, you're a serious investment advisor. Yeah, whatever. Hey, now listen. We talked about Australia. Cavalier Carpets over there has done really well. Earnings after tax is up 4%, but not so good over here, James.
Yeah, but that might change a little bit because, when we look at the past sort of 12 to 18 months, the Australian economy has been going better. We haven't been going quite so well. That balancing act's changing a little bit at the moment, and we may actually start to see that New Zealand market pick up. So it is, the result from Cavalier does sort of in my eyes spell out what has been happening recently. But one of the factors that has affected Cavalier, there hasn't been a lot of building activity, renovations happening here in New Zealand. With the Christchurch rebuild, we might actually start to see a little bit more impetus coming in there. Yeah,
what does it tell us, Jeff? Because across the ditch, Cavalier Carpets growth up by 11%, here in New Zealand down 10%.
Well, as James said, there hasn't been a lot of building going on. I mean, the construction that's been going on in the last couple of years has been infrastructure. So you've got, the tunnel through Victoria Park, you've got the Waterview extension about to start. They're mainly big roading projects or broadband. They're not domestic dwellings. So
no carpets going on there.
Not a lot of carpet on the motorway, I have
well,
to say.
let's start it. Let's start the rumour here. More carpet, please, underfoot.
That's probably cheaper than what it costs to tar seal it.
Apparently, though, even though things are looking up a little bit here at home, Moody's is still talking about a possible credit downgrade. What's that about, James?
Well, I mean, the fundamental issue with us still, even though we are in quite a good space and much better than a lot of other countries, we still have pretty high debt. We're still not immune to external factors with funding costs. but also, you know, with our exports really concentrated on some specific products, then you know, we do have some risks around that. So, you know, they've talked about potential changes, potential downgrades, and they have to, because there's a lot of things going on at the moment. But you know, they're still standing by it, and that's probably the core view, is that we're not going to see any changes.
Although the good news is, Jeff, that they say that they wouldn't consider a downgrade until what? Next year's budget. So they don't move very, very quickly, do they?
No, and I mean, you know, if you're going to be a long-term investor, you don't want people changing their mind or their view every kind of 90 days. You want a long-term, you know, a view when you're coming to assessing risk. So, yeah,
I mean, they seem pretty comfortable. I think that's with the recent budgets that you know, have been put forward. That'd be, I guess, the real question, and the thing that they will want to see in, say, 9 months, 12 months time is, are we delivering on those budgets, and are we making the savings that we've said we're gonna do, and are we, you know, borrowing that little bit less than what we've said we're going to do? So they're going to be the crucial things, and that's going to be what they're going to be looking at.
Yeah. I see there was a survey out by the National Bank recently, which said that the high exports have really kick-started rural economic activity. Is that your experience as well?
Oh, I think so. I mean, in some specific sectors, there's still a lot of communities and towns that are finding it, you know, pretty tough out there, you know, trading conditions and that sort of thing. But, you know, farmers are doing pretty well. You know, sheep and beef farmers are good red meat prices, wool prices are strong, dairy prices are looking good. They have been spending more, and they are probably going to spend more over the next few months too. So that's good news, and it has given a bit of a oomph to some of those communities.
Yeah, according to the survey, Canterbury grew 1.9% in economic activity, Southland up 2.1%, Waikato 2% growth. Any surprises there?
Not really, no. I mean, they were what we were expecting, so.
Now listen, I'm really excited. Aussies could be biting into kiwi apples this week. If you were a betting man, what would you put on it?
Well, yeah, hopefully they are. It won't be great news if they're not. But it all seems to be pretty well lined up. Reading some of the news articles that are coming out of Australia, then they're not happy about it, but we've got to suck it up.
They're dragging their feet.
They've only had 90 years to get over it. I mean.
Yeah, get over it or let it ruin your life, I say. Yeah. But we're going to have to work really hard to develop markets there, aren't we, James?
Yeah, well, I mean, the consumption level's not quite the same as what we have here in New Zealand.
Gee, not quite the same. Only half, apparently, of what we eat here. I mean, that's incredible.
Maybe they just don't have the quality.
Well, I was going to say, have you eaten one of their apples?
So that might, hopefully that might change. It opens up some opportunities for us here in New Zealand. I mean, probably going to be dribbling it in initially, but you know, as the market does develop, we've put a bit of work in behind it, then, you know, it's going to be good for us. With Kiwi dollars is weak against the Australian, another export market. It's good news.
Wouldn't you figure that Aussie consumers would be clamoring for this, Jeff? Apparently an apple over there costs them double what it costs here.
Is that right? Yeah, well, I say that it costs twice the cost and half as good. So, I mean, it has to be a good deal.
Bananas are pretty expensive, so apples offer a pretty good opportunity, I guess, at the moment.
There you go. Let's talk about Libya and oil. It looks like Muammar Gaddafi is on the ropes, although they seem to be having trouble finding him. What's it going to mean for the oil situation, Jeff?
It's too soon to say, because one is a positive that he's going. The question is, what are you going to be left with? So it's the same kind of situation we had, you know, when the US invaded Iraq. It took ages to get any kind of stable government, and then to be able to rebuild oil infrastructure. I mean, it's probably a 3 to 5 year program, and it just depends, you know, how factional it ends up being. I mean, sometimes the devil, you know, is actually not that bad compared with the uncertainty that you leave behind.
And yet John Key has already said that we're going to pump millions into humanitarian aid. Are we moving too quickly, James?
Oh no, I think it will be required. I mean, the country's, you know, struggling. They've been through massive changes. You know, they've been sort of a civil war for a while. I think it's quite critical that you start to get the right infrastructure and then get the people back on board. Otherwise, you know, start to get fragmented.
Yeah, Libya's actually got a huge amount of reserves. I mean, their sovereign wealth fund is quite sizable, so that they do have we don't know where the money actually is at the
That's
moment.
the problem. Yeah, they got a lot of oil anyways.
They got a lot of oil,
ground.
but they do have a lot of other assets which the Libyan investment fund's been buying. But the question is, whose pocket are they currently sitting in?
Yeah, I mean, the oil situation is going to be quite an interesting one because in my eyes there's two factors going on at the moment. Oil prices have dropped over the past month or 6 weeks, really based on, well, the global economy is not looking too sharp. That's going to mean less demand for oil around the world. So we've got lower prices there. Then we've also got potentially Libya coming back on board in a couple of months with, their 1.6 million barrels a day.
And that's worth 2% to global supply. That's a big chunk.
So why hasn't the price fallen at the pump?
Well, that's right. So, but we could potentially see those impacts coming through, and there's a lot of Americans clapping out there because a lower petrol prices is going to mean a bit more money in their pockets, and a bit more spending helps their economy out.
The problem is they're saying it could take up to 18 months to kickstart the pumps again over in Libya.
Yeah, I mean, no, that's always going to be the problem. A lot of infrastructure we pointed out down, so it's going to take some time. It's not going to be an easy win there.
Well, I mean, a lot of the oil industry was run by foreigners anyway. So, I mean, a lot of those ones were all, they've got to get them back out there again and get the pumps moving.
Let's look over to the U.S. now. And the U.S. Vice President Joe Biden has described the economic situation there as very, very difficult in terms of a long-term solution. How bad is it over there right now, Jeff?
I'm always a half glass full guy rather than a half empty glass. So I'm positive the US will get beyond this. They've been through tough periods in the past. There's enough capital. It's just trying to get the political wherewithal to tackle the problem from both ends. The moment you talk to Republicans, it's kind of no taxes, no tax review, cut, and the Democrats, obviously want to maintain various programs, and so you have to have a sensible approach with some tax reform, which might mean raising taxes and also cutting back spending. There's no easy fix. I mean, the US is heading into the baby boom generation when you're going to have a whole lot more people coming up to the collect window for Medicare, Medicaid, and Social Security. So.
Yeah, and interesting, Joe Biden now is visiting China. China, of course, holds $1 trillion worth of U.S. debt. Yeah. What do you imagine the conversation there is going to be, James?
Oh, there's probably some pretty tricky ones, I would imagine. I mean, Hillary Clinton was there earlier on this year, sort of reassuring the Chinese that America is a good place to put your money. So I would imagine that conversation has been repeated to make sure, because I mean, really, the Chinese have been a big player in the US market. I mean, not critical, but a pretty big player. So they need that support and to reassure and build confidence that America's in a good space.
Fonterra now here at home has said no to organic dairy farmers. And guess what? A couple of years ago, they were encouraging them to get into it, that the world couldn't get enough of organic milk. A lot of unhappy farmers out there. Your take on it, James?
Well, a tough call. They really, I mean, unfortunate for farmers. They want to get their milk out there. They've got to develop systems. But when it comes down to it, when the market signals, have at least indicated that people aren't demanding the organic milk as much, not prepared to pay the premiums. So Fonterra have got to make those. We've got to make those calls. I mean, it's a difficult situation, unfortunate situation, but it's hugely costly for their production and their supply chain, I guess, to build it in. And you've got to make those calls sometimes.
But here's the question. How did Fonterra get it so wrong? Jeff?
I have no idea. I honestly have no idea. I mean, it's a bit like you're asking people, will they pay extra for free-range eggs? And the consumer says yes, and then you kind of gear up accordingly, and then you suddenly find that people are price sensitive, and price dominates rather than being clean and green. So
yeah, but did Fonterra do enough to develop its markets, for example, or has it just put it all in the too hard basket and said, we're going to try something else?
Well, who knows? I mean, I'm no organic milk expert, to be honest, but I guess they've looked at things. Change quickly, as we know, from markets, and it seems like the consumer preferences have changed pretty quickly in a short space of time, and you've got to make quick decisions, be nimble, and it's a tough call. It's a really unfortunate situation for those farmers.
Okay, stand by, gentlemen. We'll be back. Coming up after the break, future proof. on the highways and byways of the economic world as our experts take us along for the ride and point out what's coming up next. But first, a question for you in our Farmers Facts and Figures quiz. Kiwi cars are getting older as owners hold on to them longer, and industry experts warn it will get worse before it gets better. Question: what's the average age of a car in New Zealand today? Find out after the break. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, what's the average age of a car in New Zealand today? 12.8 years for New Zealand cars, 14.4 years for the imported cars, according to the Transport Ministry's annual survey of the Kiwi vehicle fleet. And now it's time for Future Proof. What's coming up for our experts? And I'll tell you what's coming up between Auckland and Whangarei, thanks to a lot of Chinese cash, a new fibre optic cable.
Well, yeah, I mean, I think there's going to be, it's a really interesting time, I think, for rural New Zealand, because we're going to see a big change with rural broadband coming into the mix. This is initial phase of that explosion of technology and infrastructure that's going in. But it also, you know, we talk a lot about the Chinese investment, and this is a, you know, prime example of how it potentially can work. I mean, without knowing the details of how it's structured and things like that, they're pushing the go button on putting some cash in, and you know, with some Kiwi investors, it's good to see.
Yeah, and let's talk about Piako as well. This yogurt company here in New Zealand, Specialized Yogurt, that now has done the deal to go into 8,000 convenience stores in Japan. Jeff, this is a phenomenal success story.
It's been a huge growth story. I remember being in Queensland a couple of years ago and having Queensland yogurt, and they had, you know, the passion fruit and the mango flavoured, and then suddenly you could get it here. And Piako was the firm that was actually making the same kind of yogurt. I think they also got into Harrods recently.
They did, yes. They're under the label Little Melton Gourmet Yogurt.
There you go.
So they've changed the name,
branding.
but it's still them. It's all about branding. Yeah.
Exactly.
Yeah. So what does this tell us about doing trade around the world?
There's always potential, you know. You know, the exchange rate is what it is. Dairy prices are what they are. But people who are nimble and, you know, find out niche markets, there's always opportunity.
Jeff, what are you going to be watching over the next few days?
Really just to see if you get some resolution out of what's happening in Europe on the bond issue. And I guess the US, when they start getting this kind of super committee together to try and figure out how they're going to tackle their budget deficit, those are the key issues.
Now, it's interesting. You're off on holiday. You're going to be visiting Prague, for example. What do you expect to see once you get over there?
A lot of old castles. No, I mean, Prague's, I haven't been there before, so I'm kind of looking forward to it. But when you do a little bit of reading, you realise that before the Second World War, the Czech Republic was, you know, one of the most advanced economies in Western Europe. And so it did, you know, sit behind the Iron Curtain for 40, 50 years. So it'll be interesting to see, you know, how they're handling the transition.
How the world has changed and how quickly it changes.
Oh, look, I saw some photos of East Germany 20 years ago with these huge open cast brown coal mines and the kind of devastation ecologically. And a lot of that stuff's been cleaned up. I mean, I was reading the other day that one of these open cast areas they've put into forest and parks and lakes for recreational stuff. Spent something like $250 million tidying up old mines. I mean, it's going to be fascinating.
James, you're not off to Prague over the next week or so, but where will you be going? What are you keeping an eye on?
Well, you know, we've sort of mentioned what's happening out of the US, and there is going to be a big meeting coming up later on this weekend. Jackson's Hole is where all the central bank governors get together from around the world.
That's got to be a fun gathering, don't you think,
boys? It's going to be pretty exciting, I'd say.
Is Alan Bollard going to be there? Apparently he never talks about it, but what do you reckon?
Yeah, he usually is. He was there last year, so I'm assuming he will be again this year. And to be honest, New Zealand's seen pretty nicely in the around the world in terms of monetary policy and that sort of thing. It held up there on a bit of a pedestal. So his views will be valued, but I guess if the market's going to be focusing on the US because everyone's speculating that the US Fed's going to start throwing some more money at their monetary system, and they're hoping they will because it might actually spur along a bit of economic activity. So focus will be on there.
Is this just a schmooze fest by the Americans trying to soft pedal their point of view to the rest of the world?
Well, potentially, but they, I guess the whole concept is let's talk about a whole lot of issues that are going on around the market at the moment, and there's no question that there are plenty of issues going on. So I'm sure there'll be some banter.
Thanks, gentlemen. Thanks to my guests, ASB rural economist James Shortall and senior financial advisor for Spicers, Jeff Matthews. Be sure to check out our website. Meantime, consider the words of basketball great Michael Jordan, who once said, "Just play, have fun, enjoy the game." Keep the faith. See you next time.